Hi everybody, this is Lara with your end of the week video for US oil for the trading week ending Friday 24th of January. Both wave counts are expecting downward movement. That's exactly what we're getting and I'm expecting it to continue. The targets remain the same, either 48.81 or 44.61, and we're not there yet. Elliott Wave Analysis first, Classic Analysis last, as per usual. I have two wave counts. This is a bearish wave count and I have an alternate wave count which is bullish. Classic Analysis favours this bearish wave count, which is why it's my main wave count. For oil, I am expecting the bear market is continuing and I'm labelling it Super Cycle Wave 2. The structure is an Elliott Wave double zigzag, and that's a fairly common corrective structure for a second wave to be. The first zigzag is complete here and it's labelled Cycle Wave W. The double is joined by a 3 in the opposite direction, subdividing as a zigzag, and it's labelled Cycle Wave X. And here the second zigzag in a double begins to be labelled Primary A, B, C for Cycle Wave Y. The purpose for Cycle Y is to deepen the correction to give the whole structure a clear counter-trend slope. This is a counter-trend movement, and so it should have a downward slope. To achieve that purpose, Cycle Wave Y should be expected to end reasonably below the end of Cycle Wave W. When I know where Primary B may have ended, I can apply the ratio between A and C to calculate a target for Cycle Y. I can't do that yet because I don't know where C begins because B is not over. Primary Wave B may not move beyond the start of A above the invalidation point. Let's take a look now at this beginning structure of Cycle Y from this high here, this point here, subdividing as a zigzag A, B, C. The structure of Primary B here, I was expecting it was a triangle and that was invalidated, and now we're left with a double combination. That's a pretty common experience when we think an Elliott Wave triangle is unfolding, which is why I had this wave count alongside it. This double combination has the first structure in the double, a zigzag labelled Intermediate Wave W. The double is joined by a 3 in the opposite direction labelled X, which also subdivides as a zigzag, and that's the most common structure for X waves. And wave Y is expected to be a flat correction, subdividing 3, 3, 5. Minor wave B is incomplete. When it's complete, I'll expect a 5-wave structure up for C to move at least slightly above the end of A, and most likely to take intermediate wave Y up to end close to the same level as intermediate wave W, to achieve its purpose of taking up time and moving price sideways. Double zigzags, and I just went over one on the monthly chart, that bigger picture, have a strong slope, but double combinations are part of the sideways family and they should have a sideways movement. They're both labelled WXY, but they belong to different families of corrections. Double zigzags belong to the zigzag family, and in classic technical analysis terms we talk about those as sharp pullbacks or sharp bounces, whereas double combinations belong to the sideways family of combinations, flats and triangles, and in classic analysis terms we call them consolidations, range-bound movements. Elliott Wave gives more structure to those range-bound movements and tells you how each subdivision or each swing may subdivide. So we've got a three-wave structure here for W, X, and now Y subdividing as a flat 3, 3, 5. Minor wave B, also a double combination. It can be any corrective structure within the flat correction of intermediate Y. It only needs to be a corrective structure and retrace a minimum 90% the length of A at its terminus. It's a combination W, X, Y, zigzag, X, flat, 3, 3, 5. Minuet C now expected to move below the end of A to avoid a truncation, to complete the flat for minute Y. Let's take a look at this more carefully at the daily chart level, where this low here for minuet A is this point here. Here's the end of W, X, and a flat correction for Y, subdividing 3, 3, 5. This is an expanded flat because B is beyond 1.05 the length of A. It's a 1.18 length of A. The most common range for B waves within flats is from 1 to 1.38 times the length of their counterpart A waves, and so this one is nicely within the most common range, so this has a reasonable probability. C needs to subdivide as a 5-wave structure. The target applied to it is for it to reach the most common Fibonacci ratio to A within an expanded flat. Within minuet C, subminuet 1 and 2 should be complete. Subminuet 3 may be completing soon, and then a little bounce or sideways consolidation for 4 should be relatively brief and not move into wave 1 price territory above the short-term invalidation point. This wave count continues to expect downward movement toward the target, which may be reached in another maybe 1 or 2 weeks now. At the monthly chart level, this is an alternate. This wave count is bullish. It moves the degree of labeling within this huge zigzag all up 1 degree and considers the possibility that the second wave correction was over there as a single zigzag and may not be continuing lower as a double. We have to consider all possibilities. If the second wave is over there, that's where a third wave begins, and this movement here must subdivide as a 5-wave structure. In my judgment and experience, this fits better as a 3, which is what my main wave count sees it as, but it will fit as a 5, and so we need to consider both possibilities. This downward movement I'm labelling a complete second wave because it's very close to the 0.618 Fibonacci ratio of this first wave, and when we look at it at lower time frames it does look like a 3. If the second wave is over here, then a third wave at 2 huge degrees may have begun down here. The target applied is for it to reach a common Fibonacci ratio to the first wave, and within it no second wave correction may move beyond the start of its first wave. Let's take a look at this at the daily chart level, where this low down here, or weekly chart, sorry, where this low here is this point here. Here we see cycle wave 2 looking like a 3-wave structure. This is the only part of this wave count which has a better fit or look, but there is a really big problem in this upward movement here. I've shown you in previous videos where I've gone over to motive wave and tried to label the subdivisions in here that there's a big problem in the middle of this third wave. There's a very, very brief little fourth wave in here which may only be seen on hourly chart levels or lower. You can't see it at the daily chart level very well at all. This is possible, but this wave count feels quite forced, and again, in my judgment and experience, the problem of seeing this third wave here as an impulse reduces the probability of this wave count. If this wave count is correct, then a first wave up may be complete here. A second wave may be continuing as a double combination, zigzag, X, flat correction, subdividing 3, 3, 5. So primary 2 may not move beyond the start of primary 1. Let's take a look at this at the daily chart level. At the daily chart level, this high here and this low here, I think we can see all of this. Yes, here's the end of minor A and here's minute A. So now we're looking at this structure of primary wave 2, zigzag, X, flat correction, subdividing 3, 3, 5. For this wave count, minor B is a 1.45 length of minor A. That's a bit beyond the most common range of up to 1.38, but certainly within allowable limits. Minor wave C, the target applied is for it to reach a common Fibonacci ratio to minor A, and it has to subdivide as a 5-wave structure. So far it looks like minute 1 and 2 should be complete. Minute 3, 4 and 5 need to continue, with 4 not allowed to move into wave 1 price territory. And so both my wave counts are expecting a 5-wave structure to continue lower. There'll be a little brief bounce which may last a couple of days or so. May not be as time consuming as that though, because fourth waves tend to be more brief than second waves, particularly for commodities. And overall, more downward movement. It's just the targets expected are the same. The structure is the same, the direction is the same, the invalidation point for the short term is the same, just the targets are different at this stage for these wave counts. At the monthly chart level, there is some support for a bearish outlook for oil at this time. After this upward movement here, we had a really strong bearish engulfing candlestick. Range increases as price falls and volume pushed price lower. and then as price rises here, range declines. Volume had a little bits of support here, but much more support for, again, another huge bearish engulfing candlestick pattern with really strong support from volume. Now price has been essentially moving sideways. On balance, volume, however, is bullish in that it exhibits bullish divergence with price. If you have a bullish outlook for oil, that would be one piece of information to support that view, and that's why I am considering that alternate wave count. When we look at the weekly chart level, that support from ATR is much clearer than at the monthly chart level. Falling price here comes with strongly increasing ATR. Rising price comes with declining ATR. Falling price, rising ATR. Sideways movement, flat ATR. Falling price, rising ATR. Rising price, falling ATR. Now falling price, rising ATR. ATR measures the distance bulls or bears are able to push price. This is at the weekly chart level. If ATR is increasing, that means that each week the bulls or bears are able to push price a greater distance. With price rising repeatedly, with ATR increasing every time recently price falls, what that means is when price is moving lower, the bears are doing so with strength. Each consecutive week, overall, they are able to push price a greater and greater distance. But when the bulls are in control for consecutive weeks, they are able to push price a smaller and smaller distance. There is more weakness in upward movement and more strength in downward movement. Overall, this would support a bearish outlook for oil at this time. And that's one strong reason why my main wave count for oil is bearish. For the short term, we've got quite strongly increasing ATR this week. It's come with some increase in volume, so for the short term, I'll expect more downward movement. ADX at this time frame is too low to tell us that there's a trend. We've been over ATR. On balance, volume did at the weekly chart level as well make new highs prior to price, so there's some bullish divergence there. It doesn't have a new range. It's not given us any signals this week. RSI is neutral. There is room for price to rise or fall. Stochastics is neutral. So at this time, oil is in a sideways consolidation. There is no clear trend at the weekly chart time frame. Price is swinging from resistance to support and back again. Currently in a downward swing. I will look for price to continue this downward swing. I will not expect it to move in a straight line. Movements within these consolidations are characteristically very choppy and overlapping. I will expect more downward movement to support about 51, and if when price gets there, stochastics reaches oversold, I will expect an end to the downward swing and the beginning of an upward swing or a downward breakout. For an upward or downward breakout, I would want to see at the daily chart level price close above resistance or below support on a day with support from volume, particularly for an upward breakout, not so necessary for a downward breakout. Once we have a breakout from this consolidation, then we can have some confidence as to the next direction for price, but we do not have that yet. At the daily chart level, we can look in more detail at each swing. Here's the end of an upward swing, the start of a downward swing, has some support from volume overall this week. At this time frame, ADX indicates there is a downward trend within the larger picture of that bigger consolidation at the weekly chart level. ATR is overall flat for the short term as price is falling. It may continue to increase, but right now it's overall flat. On balance, volume has given us a couple of bearish signals this week. RSI has reached oversold, stochastics is oversold, but at this time frame, because ADX indicates there is a trend, these can reach more deeply oversold and can remain there for a reasonable time while price continues within that trend. That's all from me this week with your oil analysis. I hope all our members are having an awesome weekend.